Good morning, everyone. Dalton Grados Capital here with another weekly newsletter for October 13th through the 17th of 2025. Let's talk about this market here. So bulls take the stairs up, and then bears take the elevator down, and that is what we saw at the close of last week. Just a very impressive drop here. This was all on last Friday, coming down from the all-time highs near 6,800s all the way down. We already had these lines drawn. I didn't draw these after the fact. Right down to our 65.50 levels, which was this shelf support over here, which would have been sort of this wedge that we broke out of over here back in like September 10th, September 11th. We broke out of this wedge here where we're going maintaining even levels across the top and ascending levels on the lows, formed this nice wedge here at the 65.50s. We broke out of that. Where do we pull back to? Boom, right at the top of that wedge. So quite a dramatic drop on Friday. As we know, it was because of new tariff conflicts between US and China. And so, as we can see here with the Sunday evening market open in the futures, we're now gapping back up sort of in the middle, right? So these types of things are almost always an overreaction. The market freaks out, drops significantly in a short time frame, and then the dust kind of settles. So as far as the tariff stuff, we want to be monitoring for new developments in that. But as we saw back in April, we had a big shock to the market and then a recovery. So if more shocking news that's worse than last Friday comes out, then maybe we could see prices trend lower. But in the very short term, and I'm talking about today, tomorrow, Wednesday, we could see some recovery and some dust settlement from this Friday drop. The market's still priced in a lot of the tariff shock from back in April. So we have some new tariff shock, but remember, it's not totally new because the market has already digested some fears and recovered from any developments in tariffs. So again, that's going to be a lot of headline driving the market, but the worst headline was probably, and this is my assumption, probably most likely the worst headline was on Friday, and we could get some dust settling this week. So be monitoring for that in the price action. And then as far as levels, we have, this 65.50 is definitely this low from Friday. Is definitely a level to hold. And then, our regular supports and resistances we've been talking about. And if we were looking at last week's newsletter, so of course, make sure if you're watching this just on YouTube, you're subscribed to the newsletter on Substack, first link in the description. We talked about, our levels here, levels to watch to the downside. We talked about FOMC last week. We also talked about the government shutdown. So the government shutdown is leading to a delay in our economic data releases. So as we transition into talking about our economic data for the week, some of the normal data that we would get on Thursday of this week, PPI, retail sales, unemployment claims, this is all tentative because the government is shut down. So they will only release this data when the government shutdown has ended. So that leaves, and we talked about this in last week's newsletter, less for the market to go off of in the short term, but could potentially lead to shocks later on when this data, this backdated data is released, whenever the government shutdown ends. That could lead to some shocks in the future. So we want to be, monitoring for that. We don't know what these numbers are yet. These core economic data numbers, Friday we get some data, tentative. So when that is released, it could potentially lead to some shocks. So if the government remains shut down this week and does not release that data, we have Powell speaking on Tuesday, and then not much else, right? We would have been looking forward to that economic data on Thursday. So we'll be monitoring for if the government decides to reopen. Now, as far as earnings, we are entering into a new earnings season. And so this week we have some of the big financial companies, JP Morgan Chase, Wells Fargo, Goldman Sachs, BlackRock, a lot of the financial sector reporting this week, and some Johnson & Johnson, but mostly financials are reporting this week. So if you are Bank of America, Morgan Stanley, so if you are trading in that sector, Definitely be aware of that. Shouldn't be a huge market mover with earnings. That will really be when we get the big tech companies reporting earnings, which should be, let's see if this will let me, should be next week. Yeah, we get Netflix next week, Tesla next week, and then in the following weeks we'll be getting some of the bigger tech names: Apple, Amazon, Nvidia. So those will be market movers. So not much to move the market this week. Again, price action is king, right? So we had this big dramatic reaction on Friday. We opened on a gap up today. Even if I go to my intraday chart, so we have all this to contend with. Getting below Friday's low would be very telling for the bears. But we've opened Sunday night on this gap up. We're sort of settling the dust in the middle here, resolving this gap to the downside, this opening gap from Sunday night to the downside to around 6,600. I'd be looking at that level for the market to resolve that opening gap this week. Again, because when markets have an unfilled gap, buyers and sellers, the sellers down here are trapped. So market needs to come back and fill this gap to 6,600. And then, we'll kind of monitor from there. I don't really have a bias going into this week. It's just kind of, let's see what the market does. I think this gap should fill. And then we have 6,700, looks like the level we traded up to last night. So staying in this range between 6,600 and 6,700, breaking below Friday's lows would be very strong for the bears. And then breaking above 6,700 would really signal to me a recovery from Friday's shock. So that's what I'd be looking at going into this week. Let me know if there's anything I missed or anything that I should have brought up in the comments. But yeah, that's pretty much my perspective going in for this week. So thanks for watching. I'll see you guys next time.